You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program here on the Options Insider Radio Network. Pretty much the only program of its kind on the planet where we break down the action out there on the derivative side of the crypto fence. Going to talk the options, if you just get into a bit of the spot, but also the volatility, the SKEW, the volume, the open interest, all that good stuff, and a whole bunch more. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Reminding you, we're not just talking crypto here. We have a lot of shows hitting you throughout the week, usually a couple of shows a week. The best place to get it all is wherever you're listening to this fine program: Apple, YouTube, Google Podcasts, Spotify, our app. Make sure you subscribe to the full network. You get everything that way. If you have the app, you have it all coming at you pretty much anyway. That way you will never be wanting for options-oriented content. And of course, keep those reviews coming on your platform of choice. That helps new folks continue to discover the network in these troubled times. And send those questions over as well. We do love to hear from you guys. And now let's dive right in. A lot of action to break down. No time for the hot seat this week. Let's get right into it. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down the action over there in the world's leading crypto asset. Of course, we're talking about the big dog, Bitcoin. And oh, what a week it has been. You know, it doesn't on one hand, it doesn't seem like that long ago. On the other hand, it seems like a lifetime ago, especially given what's happened in 2020, that we were threatening these levels once before. It was way back in late 2017, early 2018. Bitcoin was, of course, threatening 20,000. And that, of course, is where all of this madness for a lot of the mainstream financial world really started to take hold. We saw CME and CBOE on the derivatives front racing each other to get listed Bitcoin futures out the door. And pretty much it was off to the races from there. Of course, we all know what happened. Subsequent to that, the crypto winter, where we were a long way from that 20,000 strike for quite some time. But now coming into showtime, it doesn't seem that outlandish to talk Bitcoin 20,000 anymore. Why is that, listeners? Well, it's on the rampage yet again. Coming into showtime, we were at about an 18,340, 18,300. We were just talking 9,000 strikes here on the show, 10,000, 12,000, 16,000 seemed pretty outrageous. Here we are, 18,340. Listen, less than 2,000 handles away from that magical, mythical 20,000 level. Just last show, we were at 16,800. So we're up over 1,500 handles, about 1,525 handles from last show. And that's, of course, off the highs that we hit intra-week. Obviously, Bitcoin's kind of a fun product. Depending where you look, you get different highs. Over there at CoinDesk, they hit the high, they say, of about 18,729 because they're looking at just the spot. On the futures over there at CME, they actually hit 18,750. Other venues will say around that 18,718 level. So kind of pick your poison where it topped out. But somewhere around that 18,700 level is where we mostly topped out this week. So not quite breaking 19,000, but getting heck of a way close to it out there. So quite the week for the bulls. Every week for the last couple of weeks has been quite the week for the bulls out there in Bitcoin land. Let's break it all down. A lot of these metrics coming at you courtesy of our friends over there in SKEW land, SKEW.com. Check them out. They have SKEW trading over there. And a lot of cool things cooking over there. 30-day realized volatility. Remember, that's going back in time, listeners. How much volatility has Bitcoin actually exhibited over the past 30 days? And you might say, wow, that's probably exploding. But remember, it's a lagging indicator. And it was already pretty high to begin with. It was already at about a 58%, which I've said before is extraordinarily hard for any major asset to maintain. That's exactly what Bitcoin has done. It has pretty much maintained it as over the course of this week, as you've added yet another new series of 7 days into that 30-day lagging frame of reference. It's up about 1%. It's up to 59% from where it was this time last week. Now, looking forward, looking ahead, aka the implied volatility, that's where I think more of the action will be found. Of course, those are the actual levels of volatility, the actual prices you will pay when you're out there buying and indeed selling options out there. So the implied volatility has a little bit more relevance to some of our audience out there. And of course, that one has exploded. It was 54% last week, which was already pretty impressive. And given this move, it's hard to blame them. It's exploded yet again. It's not quite 80%, 79%. So I've said it before, 60% is an extraordinary level of volatility for any major trading asset. We're talking almost 80% now out there. So an impressive resurgence of volatility. And again, not unexpected. People who come to Bitcoin from a mostly equity mentality and an equity options mentality tend to think of upside movements as vol coming in. But movement is volatility. At the end of the day, direction is kind of meaningless. We bake in our own biases into it. And a lot of people, they think of downside as volatility because they look at it from a long equity mindset. But movement is volatility. And in a huge movement like this is indeed a lot of volatility. Hence, the 79% 30-day implied we're looking at out there right now. SKEW, pretty big move, but not quite as big as we saw the week before. It was already at a minus 18 and about 0.5%. So we're talking about minus 20% now. So still firmly biased in the same direction it was last week, just ever more convicted in that bias out there. Let's look to the OI as well. Doesn't surprise me that this is just off the charts, exploding. A net OI across all the major venues. So you're talking your DEREBITs, obviously the big dog, but also CME and BAKKT and OKEX and Bit.com and LedgerX and even Huobi. Throw a little Huobi in there. All of them adding together right around 4.5 billion right now. So they're all pretty much at or right near their all-time highs. DEREBIT's all-time high for open interest is 3.7 billion. It's at about 3.6 billion coming into showtime today. CME's high is about 389 million. They're at 317 million coming into the show. Let's see. LedgerX high is about 95 million. They're at 94 million right now. OKEX, same deal. They're at their high, 235 million out there. Bit.com, 270 million is their high. That's pretty impressive. And they're at about 240 right now. So they're all pretty much at or near their all-time highs in terms of open interest. So go figure. People want to trade some Bitcoin options right now. This is actually where the use case starts to get a lot more demonstrable. Back when it was threatening 3,000, still an expensive asset, don't get me wrong, but maybe a little bit harder to make the argument that you need the derivatives. Now here we have exploding volatility, exploding price action, and a much more expensive asset. That's where the options, I think, become a little bit more interesting to a lot of people out there who say, I don't really want to spend 18,000 for one Bitcoin. What else can I do? And that's where that conversation begins out there. Let's look at all the venues. DEREBIT still the big dog, going back up to 80%. It had dropped to about 75, 72%. Now back up to 80%. A lot of that coming back from CME. CME still number 2, only at about 7%. So coming off a little bit out there. So obviously DEREBIT just on fire of late. Bit.com and OKEX hanging out number 3. At around 5% each, and bringing up the rear there is LedgerX at about 2%. And as you might imagine, pretty much a record volume week in terms of how much notional paper was being printed out there in Bitcoin options this week. Let's just break down some of them. On the 17th, we saw 699 million worth of notional going up on DEREBIT. That was eclipsed on the 18th by 701 million. Eclipsed again on the 20th by 762 million. That's even more than what we saw back on November 5th, which was 751. So very impressive levels. Pretty much new records across the board here for all things DEREBIT. If you go back a little bit farther, you go back to like October, not even that far. The highs were about 553 million. So we're talking substantially more paper going up out there right now, which again, not surprising. Bitcoin tends to be biased to the upside. Folks like themselves, a little bit of bullish action on Bitcoin. And as it starts to rally, it gets more mind share, more market share, more headlines out there in the broad investing universe. More folks start flocking into the crypto landscape and they start putting up numbers like this. Let's try to break down some of these big prints. There's so many big prints. It's kind of hard to parse them all, listeners, but a ton of big prints. Let's start off on the 20th out here, which was, of course, the big day with 762 million worth of notional. There were a lot of prints obviously going up that day. So an 800 lot going up on DEREBIT for the actually downside. No 15,000 puts going up for 0.002 Bitcoin when Bitcoin was 18,569. That was followed shortly thereafter by a 500 lot of the DEES 17,000 puts. So 800 of the no 15,000 puts, and then 500 a minute or so later of the DEES 17,000 puts. Don't think it was a spread. If it was, it's a bit of a funky ratio. But the price was about 0.019 on the DEES. So obviously a little bit pricier there. Similar, actually almost exactly the same price as Bitcoin, about $1 difference there. So yeah, downside puts, maybe some folks deciding this price action, a little bit aggressive, deciding to get in and get their hedges on. If you're wondering, I have the prices. I don't have the sides on these, but I can tell you they were a 94 vol for the NOV puts, and the DEES puts about a 70.5 vol out there. So obviously impressive vol levels out there as well. But those weren't the only size prints. On the 20th, you also saw what looks like two 1,500 lots. These are big prints, listeners, going up for the Jan. The strikes in Jan. If you thought 36,000 was a bit outlandish, a bit optimistic, we had a good chat with Bill yesterday. He brought to it his old school derivatives risk management mentality. He thought that was pretty much just upside, someone taking off some of their far upside tail risk off the table so they could put on more positions down around these strikes. And that certainly is a reasonable conclusion. Either way, someone getting back at it again, this time to an even more, shall we say, optimistic strike. 52,000 calls in Jan, going up 1,500 and then 1,500 times again. Both, so pretty much effectively a block of 3,000 because they went up at pretty much the exact same time and for the exact same price when Bitcoin was 18,600 or so. They went up for 0.0057 Bitcoin. Again, don't have a side on these, but 3,000 of these bad boys. Another 500 lot too of those 15,000 puts, this time in DEES going up for 0.013 Bitcoin back when it was about 18,600 as well. So just prints galore out here. Listeners, we could probably spend the rest of the show just breaking it down, but those are some of the more sizable prints we saw going up on our radar. So yeah, if you thought 36,000 was the end all be all of upside optimism, nope, got you covered this week and got you beat this week to the tune of Jan 52,000 calls. That's some good stuff. Let's see how much good stuff is spread out across the months. Obviously, some of the NOV weeklies coming off the board. So NOV OI going to be a little bit less. But you know what? The monthly NOV is making up for it. The one that goes out this week. So it's effectively a weekly now. There's 70,400 contracts open out there. So NOV, even though the other weeklies have gone the way of the dodo, there's a lot of paper flocking into the weekly NOV that's going out this week. Hence, it's still number one. I thought DEES would be taking the crown by now, but not so much. DEES has about 57,400 contracts open out there. Then Jan, about 38,000 again. Pretty much all of that coming on the 36,000 and 52,000 strikes. I just like saying that. It's hard to say with a straight face. And then March has about 28,000 contracts open. So NOV, still the big dog with a week to go, less than a week to go now. And then DEES with 57,000. So interesting stuff. We know crypto likes a quarterly, but these days it's all over the place. NOV and Jan also very much in the lead. And then it's kind of hard to talk strikes anymore because some of these nonsense strikes have started to take over our strike list here. Number one with the bullet, still the 36,000 strike with about 20,000 contracts open. Then we go down to the which it sounds weird to say this with a straight face, but the comparatively more sane, more realistic 20,000 strike. That's where we are, listeners, 20,000. Back in the full view there. 18,200 contracts open there. Number 3 are the 16,000s with about almost 17,000 contracts open there. Then we go to the 18,000 strike with 15,200. Then the rest is kind of a bit of a tie around 12,000 for a lot of the other strikes out there. If you wonder how much is open on that 52,000 strike, it's about 7,000 contracts. So no small amount of paper going up on the 52,000. So they're between the 36,000 and 52,000 strikes in jam. We have, 27,000 contracts open right now. So there you go. If you want to play in some crazy jam upside, someone's putting some juice on the table for you up there, making it nice and easy for you to trade. Let's head on out to CME. Obviously, the big dog in most derivatives contracts, still nascent, still growing out there in Bitcoin options. We had pretty decent days over the last week. As you might imagine, the paper was everywhere and CME couldn't avoid it. Friday was kind of a lighter day, 140. But we saw Wednesday almost 300 going up. Tuesday almost 400. Man, that's a 5x contract. You're talking 2,000 contracts going up there, which is pretty sizable for CME over there, and about 161 on Monday. So decent paper out there. Again, it's no DEREBIT with, many, many hundreds of thousands of contracts, but it's slowly but surely starting to get a little bit more positioning out there. The futures, though, have already been pretty active and remained active for a while. Pretty heavy week. Already today, coming into showtime, about 13,000 contracts on the tape. Same deal, 5X contract out there. So you're talking over 50,000 coins changing hands in those contracts out there. Friday, we saw the same deal, about 12,000 contracts. So you're talking about 60,000 coins changing hand. Thursday, about 8,000 contracts. Wednesday was the most active day, 16,000. Seems like they're on pace to eclipse that today, though. Tuesday, 11,000. Monday, about 7,000 contracts. So again, pretty active stuff on the futures side, and that's a beefy 5X contract. So a lot of underlying changing hands over there. Go out to BAKKT land, not as much on the futures front changing hands out there. They did a little over 2,000 contracts. That's up about 116%. That's not bad. A little bit of growth there, but it's also a far cry from their all-time high set back in September of 18,700. You think they would maybe be threatening or even eclipsing that again, given how much volume is going up on every other venue? Yep. Not so much, unfortunately, out there in BAKKT land. Let's see what's going on now with the rest of the crypto market. It is time to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's get into it. Let's explore all the other products outside of Bitcoin, except for right here where we talked about the top 10. Kind of hard to avoid Bitcoin in that conversation. Remember, standard caveats apply. You know what the deal is by now. Number 10, Binance Coin at about 4.3 billion. Number 9, Cardano, 4.6 billion. Number 8, Polkadot, about 9 billion exactly. Or excuse me, 5 billion exactly. 9 billion would be a little bit higher. Number 7, Litecoin, 5.7 billion. Number 6, Bitcoin Cash, 5.8 billion. Number 5, Chainlink, also 5.8 billion. Kind of a tight race there between 5 and 8 or so. Then we go up to number 4, Tether, jumps up quite a bit, 18.4 billion. Number 3, XRP, 24. That XRP's had quite the leap. So XRP back in the top 3 here, 53. That's quite a huge move for XRP again. ETH number 2 at about 67.6, and number 1, of course, the big dog, Bitcoin, 340 billion out there. Moving around, let's get out to the number 2 dog out there, ETH. ETH's had quite the rampage as well. This is not even a rising tide lifting all boats. This is a tsunami just crashing through all of the altcoin and carrying them along, whether they want to or not. ETH up 130 handles from our last show, threatening 600 coming into showtime, 593 and change out there. It was 462 on our show last week. So ETH just exploding. The realized vol out there ticking up, going back 30 days, 30-day realized up to about a 70%. That's already very impressive. It has exhibited a 70% sustained volatility over the course of the past month. But going forward, a lot more vol getting priced in, listeners. That 30-day implied volatility has exploded from 63% last week to 104%. Yes, over 100% implied vol out there. If you know anything about options, you know That's pretty rich, pretty hard to maintain. So we'll see. If anything could do it, though, it's something in the crypto space. There's a lot of juice out here, a lot of volume, as you might imagine, out there in ETH land as well. A lot on the tape today, actually. Coming into Showtime, DEREBIT was putting up some numbers, almost 100 million worth of notional, at 99 million, right, as we kicked off the show here. And that's actually the most active day since our last show. We saw Sunday, 70 million, Saturday, 82 million. Again, these are all notional numbers. Friday, 51 million, and then Wednesday, 48 million, and Tuesday, 57 million. So all really high days. They compare pretty well. They pretty much all eclipse, except for Friday and pretty much Wednesday and Tuesday. Everything eclipses the recent high we saw of 69 million back on November 6th. So very active days out here in ETH land. As you might imagine, the OI also just exploding out here in terms of ETH options. We're closing in net on up DEREBIT and OKEX. Throw a little Huobi in there as well. They're the three leading venues out there in terms of ETH options, at least until CME. You guys have been asking about a CME ETH contract. Nothing yet. I even asked Tim McCord about that, the guy who heads up crypto over there. So check that out if you missed it on, I think it was on our TWIFO program. I snuck that question in for you over there. He said nothing to report yet, but I think they're probably eyeing it over there if they're seeing all this action. But right now, net OI on the options front, closing in on 800 million. So yet another new record. DEREBIT is at their max. Their max is 686, and they're pretty much at that right now. So they're all pretty much pinning the needle right now. OKEX, Huobi, and DEREBIT out there in terms of OI. In terms of where that paper is lining up, let's break it down a little bit. I said coming into the Showtime, we were threatening 600 in ETH, about 593. And we're seeing the lion's share of that paper is still back at the 400 strike, 90,000. Remember, these are a little bit smaller contracts, so you're going to see a little bit more numbers in terms of OI out here. So bear that in mind when you're hearing some of these numbers. But 90,000 contracts open on the 400 strike, followed by, looks like the 450 strike of about 87,000. So very near term in the money now stuff, which is kind of interesting. Get up to where we are right now, the 600 strike, only about 41,000 open there. So a lot more in the farther in the rearview mirror in the money strikes than there is right now where we're trading right now. In terms of months where the action is, it's all DECE all the time. Nearly 600,000 contracts open in the DECE expiration, about 279,000 in NOV, and everything else a pale shadow. You got to go out to March actually to find anything else that's even close. That's 232,000. So the latter portion of that showing the crypto love for quarterlies out here, but still a little bit of NOV love alive out here as well, the 279,000 contracts. So interesting stuff on the tape out there in ETH, but Ripple has been on fire. How long have the XRP bulls been waiting for this week? It's been languishing in the 20-odd cent region for almost as long as we've been doing this show. It's threatened below that a few times, threatened north of it a little bit, got up to 30-odd cents a few times. This week, just like I said, the tsunami crashing through all the people who have been waiting and waiting and waiting for this moment. 52, almost 53 cents coming into Showtime. So not quite doubling, but pretty darn close, listeners. It was at 28 cents on our last show, almost 53 cents right now. So huge run for XRP. If it keeps this up, we might be able to start talking some more options out there in XRP. Wouldn't that be fun? Right now, still a little cheap for the options traders out there, but still interesting stuff nonetheless. Let's round out some of our top five here. At least some of these are former top fivers, not really top fivers anymore. Bitcoin Cash up a whopping 62, almost 63 handles from our last show. And good old Bitcoin SV up 33 handles from last week. Now let's see what you guys have in store for us. A little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, let's do it. Let's answer some of your questions before we get out of here on this hot and heavy week here. I'd like to get you in, get you out, get you on with your days here on the Crypto Just the Facts episodes here. First off, we have Mace. Mace wanting to know, why do you think Bitcoin correlation is so high to the equities right now? Well, he's referring, of course, we had a listener question last week from JLC. He wanted some updated numbers on Bitcoin correlation. So I broke it down specifically for this year, 2020 listeners. And as Mace points out, there were pretty high correlations in the equities department, 41% for S&P 500, NASDAQ a little higher, 43%. So why do I think that is, Mace? Well, like I mentioned, this is data for 2020. 2020 is, by just about any measure you could possibly throw at it, it is an outlier year. But that's the reason I limited my analysis to this year. I don't want other quiet, sleepy years. I don't go back to 2017 where nothing really happened and markets just kind of gently drifted up and vol went to nowhere. That's not exciting. What's interesting and what's useful, I think, for people out there who are looking at Bitcoin as some sort of diversification or alt to put into their portfolio is how does it perform in years like this where it's all hitting the fan? As you could see, even when we expand it to pretty much the entirety of the year, it's not just focused on March. That number is even higher if you get to March, obviously, or even the recent sell-offs we saw leading into the election. But if you expand it throughout the entirety of the year, still about almost 50% correlation there. So that's something to bear in mind. That's kind of why I did that there. What was it? Mace. So I think that's a bit of an outlier. Obviously, this year it's not going to be that high in a normal year. In fact, we crunch the numbers and it isn't that high. But the time you want diversification tools, the time you want hedging is times like March and times like a month or so ago when things are really lighting it up and moving perhaps in a direction you don't want for your long portfolio, in which case that's when you need to know how correlated Bitcoin is. And unfortunately, for all those people out there arguing about it's a negatively or just uncorrelated asset, yeah, not the case. And when it matters, and I've said it before, I'll say it again, when it all goes to hell in a handbasket, correlation tends to go to 1. And we saw that, unfortunately, with Bitcoin as well, selling off, 30% intraday in the madness of March. That's not a good hedging and diversification tool. So if you're out there playing with Bitcoin as kind of the uncorrelated portion of your portfolios, bear that in mind. And that's why we pointed that out, May. So I think that's higher than it's going to be normally, obviously. But we pointed that out for a reason to kind of illustrate our point there. Good question. Then we got my boy Luigi coming in. I believe this came in on our last show in the live chat. He says, I follow extrinsic value. Interesting. And I notice it to be very close to the opposite side of the option. Call side to put side. Is that what you mean by put call parity? Well, yes, pretty much there, my boy Luigi. Again, I know a lot of people come to this show who aren't super option savvy. So in which case, if any of these things we're talking about here, listeners, put call parity, extrinsic value, if that all spooks you, or you don't know what the heck we're talking about, I encourage you to check out some of the educational shows on our network like Options Bootcamp, Options Playbook Radio. We'll walk you through all that. Cliff Notes version here. Extrinsic value is the portion of the options price that exceeds the meat. So let's say you have, XYZ trading at 100. If you have the 95 strike call and you buy that, that's $5, what they call in the money. It's $5 of juice on that because the actual stock is trading, or in this case, the underlying asset is trading $5 above it. But in real life, they're not going to trade exactly $5. It's going to trade, let's say, $5.50. That extra portion, that juice, that's what my boy Luigi is referring to here. That is what's referred to as extrinsic value, the stuff that's beyond the actual meat on the bones of that option. Now, he says he noted that extrinsic value is very close to the opposite side of the strike chain. So you have the calls on one side, listeners, puts on the other. And yes, that is correct, Luigi. You're going to see that. If that's a good ballpark estimate, if you're looking at an option, let's say in our example, the 95 strike call, it's going to be trading $5.50. It's $5 in the money. Exactly. So you have 50 cents worth of extra, the extrinsic value. That is going to imply the price or the value of the put on that same 95 strike. So in our example, we can go and assume that 95 put is going to be trading somewhere around 50 cents. It's going to be a cent or two different depending on, what's going on, interest rate, maybe some skew, maybe some other things going on out there. But 50 cents is going to be the implied value for that one. That is what we mean by put call parity. The price of one option will imply the price, the value of the other option on that same strike, and indeed vice versa. So it's a good shorthand thing to go look at. You can go look at and say, okay, this call should imply a price of X on the put on that same side, or vice versa. And if it doesn't, which does happen sometimes, usually it's in names that have funky, let's say they're hard to borrow, so people start bidding up the puts, for example, to get short and they start crushing the calls. So you see the skews get a little wonky. So it can happen. That's when you start seeing things like the synthetic trades we don't really get to talk about too often. The conversion reversals, again, I don't want to scare anybody on this show, but conversion reversals start to get out of whack. And then big firms will notice that. They'll start trading those as an ARB opportunity. But in general, yes, you are correct. The price of the put should imply the price of the call and vice versa there. And what it is effectively is the extra. So whatever you're taking, let's say the in-the-money call, in this case, $5.50, the out-of-the-money put should have no intrinsic value, but it has a value that is trading at, and that is the extrinsic value, which is around 50 cents in our example. So you are correct, Mr. My Boy Luigi, but the flip side, if that all scares you or intimidates you, don't worry. We got a lot of content for you on the network to get you up to the level where you understand what the heck we're talking about there. All right, listeners, unfortunately, that music means we've come to the end of a Just the Facts Ma'am episode here of the Crypto Rundown. I thank everybody out there who joined us live, who listens after the fact, who sends in questions, all the other fun stuff that you guys do. Keep it coming. Stay safe out there. These are some crazy markets. So be diligent, be judicious, and maybe stay a little bit smaller if you're concerned about what's going on out there. Can't really understand it. Hey, remember, cash is a position too. If you're worried, sit on the sidelines while you figure things out isn't the worst thing as well. So be judicious in what you're up to out there. Stay tuned to the network throughout the rest of the week. Remember, it's a truncated holiday week, so Thanksgiving holiday here on Thursday. No shows there. We'll figure out what's going on with Friday and whatnot. We'll let you know. In the meantime, though, stay safe, stay sane. We'll see you back here tomorrow for more great content on the network, and then back here again next Monday for another episode of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.